How can you avoid tax on the sale of a highly appreciated home? Normally, you do get the $500,000 exemption for appreciation inside of a personal residence. And for many people, that's plenty. However, for individuals that have owned their homes in high cost residential areas, they may have considerably more than $500,000 worth of appreciation. So what are their options? And part of what you need to do is to convert at least your primary residence into some type of a rental. It could be an Airbnb rental for part of the time, or it could be a full-time rental for, a year and a half to up to 3 years. And then if you go ahead and sell that property and do what's called a 1031 exchange, then you can use the proceeds to then buy new property or multiple properties. Those also have to be rented out for a period. Again, year and a half, 2 years. And then you could use one of those properties or more as your new primary residences. You will have avoided tax gains completely on that. The one trick, of course, is that what I just described was somewhere between a 3 to 5 year period between renting out to some degree the first primary residence and then renting out what you intend to move into. And so there has to be a circumstance in which there's enough of a tax savings that's worthwhile for the sake of going through the hassle for that. And yet, if you're not quite certain where you might want to live, but know that you might need to go ahead and sell your current primary residence, then it's worthwhile actually exploring this, talking with your advisors to get a better sense of, what's the ways in which you could start to rent out your existing residence and maybe go try living in some different places, rent there while you're starting the clock to then start the 1031 process.